Hello everyone, welcome back to the channel where I speak about my investments, holdings, and track my net worth. Today I'm going to be discussing SCHD, an ETF that focuses on dividend growth. This is one of my main holdings and I spoke about it briefly during my 4-fund portfolio video. However, I want to speak about it a little bit more in depth in this video. So first things first, what exactly is SCHD? SCHD stands for the Schwab U.S. Dividend Equity ETF. It is a popular exchange-traded ETF offered by Charles Schwab. It aims to closely track, as closely as possible before fees, the total return of the Dow Jones U.S. 100 index. The fund has become extremely popular through the dividend investment community recently. Here we have a Reddit search for SCHD pretty much the past month here. And as we can see, there are plenty of posts related to this ETF showing its popularity. It seems that a lot of investors, especially in the dividend community, want to go about investing in it, want to learn more about it, also speak about other people buying it. So I think it's definitely important to speak about for general information, kind of how the ETF operates and if it is a good choice or not. So from the fund page, I exported to Excel the top holdings, actually all the holdings that SCHD has as of yesterday. And this is how it is broken down. There's quite a few holdings, but not as many as an ETF like VOO, an ETF that tracks the entire market. So this is quite a bit more concentrated, but there is still a significant amount of diversity. So if you're concerned about being under-diversified, if you only buy this ETF, there's probably still plenty of diversity so that you don't have to worry about being under-diversified. So kind of as indicated by the name, the intent of the portfolio is to track an index focused on quality and the sustainability of dividends. Dividends are important over a long time, not only for volatility, but they've also have the potential to grow over time. SCHD focuses on companies that are known for their strength and increasing their dividends over time. So with this export, we could see that the top holdings here are Broadcom, PepsiCo, and Merrick. I'm not going to get into all of the other ones because it would take forever to explain. So I'm just going to go over the top 3 and show you these companies very quickly in regard to dividends. So we see the number 1 holding here is Broadcom, which operates in the technology sector. It has a current dividend yield of about 2.3%. A very comfortable payout ratio. It does not seem to have any problem going forward paying its dividend, and its 5-year growth rate is about 25%, and that's incredible, and its dividend growth is 11 consecutive years. So great company for that. The next company is Pepsi or PepsiCo, very popular company. Somebody probably ate or drank the products it sells. It's very difficult to get away from this company, so you probably definitely heard of it. It's right there with Coca-Cola in its popularity pretty much. Current dividend yield about 2.75%. Solid payout ratio. It's also going to have no problem paying its dividend going forward. Solid dividend growth rate as well, and look at this dividend growth, 50 years of dividend growth. So that is incredible. And then finally, the third holding at the top, or from the top, is Merrick. It is a healthcare company, so odds are it's not going to be going anywhere anytime soon. It is a very large healthcare company. Dividend yield 2.65%. Another solid payout ratio. Not going to have any trouble paying its dividends going forward. Great dividend growth rate and a good history of increasing its dividend over time. So unlike quite a few dividend ETFs or ETFs in general that kind of just base their selection method on simple criteria, whether it be filtering by maybe a 2% yield or a 3% yield, this ETF has a pretty complex selection method to pick its stocks. So as I already said, its goal is to track the Dow Jones U.S. Dividend 100 index. So this is the page of the actual index. So kind of verbatim, the Dow Jones U.S. Dividend 100 index is designed to measure performance of high-yielding dividend stocks in the U.S. with a record of consistently paying dividends, selected for financial strength relative to their peers based on financial ratios. So its goal is to basically pick the best of the best dividend growth companies. So here's basically the criteria to enter the Dow Jones U.S. Dividend Index. First, there's a filter, and they must pass the following screens: minimum 10-year consecutive dividend payments, and I believe that this is going to be average daily traded volume of $2 million. So they want it to be liquid, and they want a pretty large company size, so it's not small. Overall, after it passes this, it goes through basically an equation that screens them further based on financial metrics such as free cash flow to total debt, return on equity, and 5-year dividend growth. So it filters companies based on how long they've been paying their dividends, and then it brings them to another screening metric to further filter for quality. So the ETF does play a relatively significant part in my overall holdings. This here is real money. This is how much I currently have invested into the ETF. And it's a great example today to go over because, as you could see, this ETF went up in value, but overall, I believe the market today is down a good percentage. Whereas this ETF and my portfolio as a whole actually is up. So my portfolio doesn't exactly track the S&P 500. So that is part of the reason why I constructed my portfolio the way it is, because it gives a little bit different diversification. I went over that in my previous video about my 4-fund portfolio. So kind of why do I invest in this ETF? Other than what I said before about its quality holdings, it also provides diversification. There's very little overlap with my other holdings. It offers a very solid dividend yield. Unlike my other holdings, I believe the only other holding that I have that offers a similar yield is SCHD, but that portfolio is designed a bit differently than SCHD. SCHD goes more so quality. This just goes strictly for dividend yield. And again, looking at these top companies, actually all of these companies, I don't think that any of these are companies that I would disagree with owning. Recently, the ETF has had a bit of a downturn overall because of the entire market, and it also rebalanced recently, and it had a financial kind of weighting, so it was affected by all those bank failings, as you could see, M&T, Fifth Third, but it's bounced back a bit, and it's basically going right back up with limited downside. So this is a Reddit post that I pulled up that was posted 3 days ago. It goes over which dividend ETFs would you plan to hold on to forever. And there's quite a consensus that everyone wants to hold SCHD for a long period of time. And I don't know if popularity is necessarily an indication of how well a ETF or any stock will perform, but it just goes to the relative consensus that this is a quality ETF that kind of everybody agrees about, myself included. And I wouldn't recommend maybe holding this by itself, but if you did, I don't believe you would go wrong. So if you only wanted to set it and forget it, especially if you were looking for dividends specifically and you just didn't want to concern yourself with anything else, I don't believe you could go wrong with just holding SCHD if you're kind of like the lazy investor that doesn't want to do so much analysis and work. I don't think anybody would really fault you for that. So that's going to conclude today's video. I hope you all gained some insight into the ETF SCHD. I know a lot of people were speaking about it, so hopefully this video gave you some insights like I said. And as always, everyone, thank you for watching. I will catch you in the next video.